I think we're going to get started in a couple of minutes. People seem to still be settling in after lunch, so we'll give those folks a couple of minutes.
Catherine, can you hear me in the room?
Well, I think we can get started. Hi, everyone. I'm Catherine Petrus. I'm a CRA analyst with the National Community Reinvestment Coalition. And I am joined by my colleague, Jerry Kelman, who is on our Zoom.
Can you hear me?
We can hear you.
Great.
So to start, I wanted to share a little background about NCRC, and apologies to those of you who were in this earlier session, but I see some new faces, so I want to cover some of the background material. NCRC is a coalition of about 600 local community-based organizations, and together we, NCRC, and our members are focused on a just economy and fairness in banking, housing, and business services. I've highlighted the program that I'm a part of. I'm part of NCRC's organizing team. Along with Jerry, a large part of our work is securing community benefits agreements from banks, and that'll be a lot of the topic of today's workshop. Today, I'll do a quick introduction to community benefits agreements, talk about some CBAs that were recently announced that impact Oregon, and then talk about some specific commitments in those CBAs that relate to housing. I'm sorry, I have the wrong slides up. Sorry, everyone. Let me just make sure I got the right.
Catherine, while you do that, I'll let people know that the focus of today is minority homeownership in the context of community benefit agreements and the Community Reinvestment Act, which Catherine will break down. We may be in it for a tough year because of interest rates, but in fact, since much of the issues around minority homeownership have to do with the effort made by banks and folks who make mortgages, or their lack of effort, there's a great deal they can do independent of the interest rate. And in fact, Umpqua will be doing a lot more because of their commitments on the CBA. If minority homeownership is challenging in general, then we know it's more challenging in Oregon. We'll break that down. We're somewhat inspired here by the Seattle Black Homeownership Initiative, which is really organized by Housing Oregon's peer organization in the Seattle area, which is the Housing Consortium. And then how much they've accomplished there. We'd like to see more accomplished in this regard in Oregon. Catherine, are you up yet? I'm sort of
Yes, I do have the right presentation, just one slide is
okay.
misplaced.
I was just doing a
So
small,
thank you, Jerry.
small filibuster here until your slides would go
I
up.
appreciate it.
I would have to. Soon I would be telling jokes, so I'm glad you came in.
So this, yeah, like Jerry said, we're going to talk about minority homeownership and also an upcoming coalition that is being launched in Oregon to focus on reinvestment. A quick introduction to community benefits agreements. So CBAs exist because of the Community Reinvestment Act, and you're all probably familiar with redlining. This is a redlining map of Portland from 1938. And as you all probably know, redlining was a practice of banks really driven by the Homeowners Loan Corporation to prohibit lending in certain neighborhoods that were described as hazardous. And that determination was made by surveyors sent out by the Homeowners Loan Corporation, who drew maps like this one, and in areas that were determined to be hazardous, which was a determination based on class, race, and immigrant status, banks wouldn't make loans. And so that, of course, resulted in years of disinvestment. And in the 1970s, the Community Reinvestment Act was enacted in an attempt to end redlining. It was one of 4 laws, starting with the Fair Housing Act in 1968 that prohibits discrimination. The Equal Credit Opportunity Act is another prohibition on lending discrimination. In 1975, the Home Mortgage Disclosure Act was enacted, and that requires disclosure of mortgage loan data by race and income. So a lot of work that NCRC does is analyzing HMDA data and looking to see where banks are doing well and where they need to improve. And 1977, the CRA was enacted, and that was the only one of these laws that actually places an affirmative obligation on banks to do something. And it's actually a really short law. It's 6 pages. So if anyone is interested in reading it, it's not a terrible read as far as statutes go. But it places an affirmative obligation on banks to serve the entire needs of the communities that they serve, which is usually defined by their branch footprint. And I'm not going to go into details about CRA today, except to say that it's very data driven, and banks are evaluated largely in comparison to how other banks are doing. So a lot of what we do is benchmark particular banks, a particular bank's record versus other banks in the geographic area that we're looking at. And NCRC we have a lot of videos on our website, including a 1-hour CRA webinar that goes into much more detail about the different tests in the CRA and the evaluation, how it works. So the CRA is really a law that requires community engagement and involvement to enforce it. CRA enforcement from the regulators is through evaluations that take place every 3 to 5 years. But 98% of CRA evaluations result in a passing grade. So it's really up to us and groups like all of you to enforce the CRA, which means analyzing the bank data, which NCRC can help with, but holding the banks accountable it's a group effort. Gail Sincata put it really well when she said full responsibility for CRA enforcement has always been the job of people in the neighborhoods. She was one of the activists in the 70s who really spearheaded the movement for HMDA and CRA to be enacted. On to what CBA is. Community benefits agreements are agreements between a bank, NCRC, and our members, or other community-based organizations in which the bank agrees to increase its CRA activity. Usually it happens in connection with a merger. That's often what motivates banks to do a CBA. And we usually include or advocate for banks to include increases in mortgage and other CRA eligible lending based on a baseline using historic data. And we also ask for a lot of qualitative commitments relating to branches in low-income census tracts. These are just a few examples. Publishing reports on staff diversity is something we're getting more and more banks to agree to. I think PNC actually just published their EE01 report, which is a report that all banks have to file, but it's not, it doesn't have to be disclosed publicly, but more banks are actually sharing that information. And then we more and more try to get banks to agree to collaborate with NCRC in the implementation of the CBA. So instead of just a series of commitments, we also want a commitment to communicating with us and our members throughout the term of the CBA so that we can monitor the bank's progress and make sure that they're meeting their commitments. Some more examples of how the CBA is structured. We have quantitative and qualitative goals, and the quantitative goals are structured to follow the way banks are evaluated in their CRA exams. So we have a section on mortgage lending. We always try, instead of just one big number of an amount, a dollar volume amount, we try to get banks to commit to sub goals in their mortgage goals. So we want to see a higher volume of loans that are small dollar loans because that's where affordable loans are needed. So we ask for goals measured by loan units, not dollar amount. And we ask for sub goals to minority borrowers, and we also ask for the same kind of breakdown for small business lending. Small business lending, public data is very limited. We're hopeful that there will be regulatory updates soon. But for now, the only public small business data that we get tells us where banks are lending. So they have to report the census tract data on their small business borrowers, and then they have to report the number of loans they're making to businesses with under $1 million in annual revenue. So we always look for increases in those two categories. And then additional qualitative goals that we seek are a commitment to new partnerships, meaning a commitment to philanthropy, lending, or investment with organizations that the bank has not previously had a partnership with, either a lending relationship or a philanthropy relationship. We like to see a commitment to expanding CRA or lending staff, especially in the mortgage context. We want to see a commitment to hiring loan officers who reflect the communities that need additional mortgage lending. We're trying to get banks to be creative in underwriting, although that's very hard. We relying strictly on credit scores is problematic. And so some banks are actually agreeing to alternative underwriting models. Rental payment history is now approved as an underwriting criteria by Fannie Mae. So that's been very helpful whenever Fannie Mae or Freddie Mac approve an alternate product feature, banks are quicker to adopt it or will more readily incorporate that into their mortgage lending. And then we also look for banks to commit to more retail product and service innovations, especially overdraft. That's a big area of concern of ours, and we want to see banks eliminating that completely, which thankfully some of our national banks have started to announce the elimination or major reductions in overdraft fees. I alluded earlier to when a bank does a CBA, it's usually motivated by a merger. Partly CRA motivates banks to do CBAs, but another big motivation is when they merge. Banks have to show the regulators in the merger review process that the merger will benefit the convenience and needs of communities. And so they often will call NCRC after a merger is announced and say they want to do a CBA. If they don't reach out to us, we'll often reach out to them and put some pressure on to convince them that they need to do a CBA. So mergers are our biggest opportunity for CBAs. Sometimes we'll do a CBA renewal when a bank CBA term expires. They'll often reach out to us, and if not, we'll call them and say, let's do another CBA. And those we treat like a new CBA campaign. So the way a CBA campaign works is NCRC plays the role of a facilitator. Once we get a commitment from a bank to do the CBA, we organize listening sessions. We will work with our members and invite community organizations who are located in the areas the bank serves to speak at only virtual meetings lately. Before the pandemic, they were in person, but we've been doing virtual meetings where we'll have 20 to 25 community leaders on a Zoom call with the bank CEO, and we ask the bank to listen, not talk. They usually want to do a PowerPoint slide presentation or share some marketing materials, but we ask them just to listen first before they start drafting the CBA, definitely. And once we finish those sessions, we use our research of banks' historic HMDA and small business lending and community development lending and investment, and we put together a list of recommendations, which includes recommended increases in all their CRA eligible lending and all the recommendations we've heard from community groups. So once we get that recommendation document out to the bank, they give us back a draft CBA, and then we negotiate usually back and forth quite a bit until we come up with a draft that is good enough to show to our members. We have a follow-up meeting with all the participants from the CBA campaign and get some feedback, and then go back to the bank, and usually they'll make a couple of changes and we'll announce the CBA. I'll go through the timeline for the two CBAs I want to talk in more depth about today in a later part of the presentation. So why getting involved is important is, I think I alluded earlier to how important it is for community groups to enforce the CRA, because the regulators are giving 98% of exams a passing grade. It's really important to keep the pressure on banks, to keep engaged with banks. The CBA process also facilitates collaboration among communities and banks, and collaboration is really the heart of the model. And while we are pressuring banks, we also want to work with them, because a successful CBA is really in everyone's interest. So the ultimate goal is to get more resources into communities. And an added benefit is developing relationships, personal relationships with bank employees or regional CRA officers that can hopefully lead to long-term partnerships. Before I go into Oregon-specific CBAs, I wanted to pause and see if anyone had any questions.
Well, I have a comment.
Oh, I think we need to pass the mic around here.
Oh, okay. I can wait, but I did have a comment.
Hello, can you hear me? So what are some of the areas that the banks are focused on being more proactive? I know we heard from an earlier session that we could definitely use some more low interest loans, financing for land acquisitions, lines of credit for property developments. But what are you hearing from the banks as far as where do they need areas for support from community agencies like ours?
So this particular workshop is about minority home ownership, and we do hear a lot of, well, I'll say for Umpqua Bank, their community benefits agreement does have really ambitious goals for increasing mortgage lending to minority borrowers, which I'll talk about in a lot more depth later. And they've also indicated to us, and I feel pretty encouraged about their approach that they've taken with us so far. They've indicated that they really want to hear from community groups about mortgage product design and marketing, and how they can improve their products, their mortgage products, to reach more minority borrowers and actually achieve the goals that they've set out in their CBA.
Catherine, can I jump in on this?
Yes, please.
So making minority mortgages to moderate income people of color, or we talk about, we have specific metric agreements, commitments from Umpqua, for example, for African Americans, Latinos, and for Asians. But Oregon's diverse, and there are immigrant groups and religious minorities, et cetera, who are not having opportunities for homeownership. So we need to consider them also. It's a collaborative activity with the community. You can't really do it, reach any numbers without the community. You need to be working, the banks need to be working with existing organizations, especially those that have minority constituencies, that include community groups and advocacy groups and faith-based institutions and social service groups. They need those relationships to find potential buyers. They desperately have to be using housing counseling agencies who not only know minority buyers and first-time home buyers, but also are really the key factor in helping them get to the credit situation where they can buy a house, and to understand the labyrinth of home buying they have to go through. So they need to cooperate with housing counseling agencies. For those of you who are building homes, they need to be working there. They're minority realtors, hiring loan officers who know the community and from the community. It doesn't happen without these things, and then without all the other things that Catherine will get to a little bit later in terms of what's involved in the minority homeowner initiative. So I think that's key. The second thing you asked was, what does the bank care about? Where do they have to measure up? So the agreement, those who've done a CBA, the territory is sort of defined for them. That is, they have metrics that they have to reach regarding the making of mortgages to low and moderate income folks and people of color. They need to increase their small business lending, their minority small business lending. They need to increase their philanthropy and target in certain ways that are more community oriented. They need to increase their community development lending and reach organizations previously with that kind of lending they haven't done before. That includes housing development lending. So it's all spelled out in the agreement, although it's not imposing anything alien on the bank. These are things the bank needs to be doing anyway. The other thing have to do with philanthropic priorities, which sometimes are influenced through the CBA. This is an ongoing process in terms of implementation, and in creating an Oregon Reinvestment Coalition next month, not an NCRC coalition, and a coalition of the organizations, we think we can also shape the CBAs going forward. Thanks.
On that note,
Hi, I'm Brad Ketch. I'm with the Rockwood CDC, which is a BIPOC-led organization here in Gresham, and we're part of the Community Reinvestment Coalition group. We're doing the organizing today, right now. This is the organizing, and I'm going to pass around a sign-up sheet if you want to stay in the loop. And for those of you who are online, there's a whole bunch of people from the first session, so feel free to go to the second page. For those who are online, if you just put in your comments, your name and your email, or send it to Jerry or Catherine, I'll be compiling one list, and that'll kind of be the basis for some of the work going forward.
thanks. And my contact information is in the slides, which should be available to everyone after the presentation. So moving on to two CBAs that were announced recently, Umpqua Bank and US Bank. These were both in connection with a merger, which is typical for our CBAs. The first one was Umpqua and Columbia, and this one's a little unique in that Columbia Bank is acquiring Umpqua, but after the merger, they're using the name Umpqua. So that's why we're referring to it as the Umpqua CBA. It's an $8.1 billion plan over 5 years, starting in January. And we're just waiting for the merger to be finalized. They expect regulatory approval this month or next month, and expect to close the merger this year, which means that we can start working on CBA implementation. US Bank and Union Bank also announced a CBA in May for $100 billion. And because US Bank has a large footprint in Oregon, there are some state level commitments for Oregon, although most of the US Union plan focuses on California because that's where the major shift in the US Bank branch footprint will take place, because that's where most of Union Bank is located. But I'll quickly touch on some of the US Bank CBA commitments that will impact Oregon. This timeline walks through our Umpqua CBA campaign, and it started in October 2021 with the merger announcement. We approached the bank and they agreed to do the CBA campaign with us. We had three listening sessions with 75 speakers from Oregon, Washington, and California, and then compiled all the recommendations, all the NCRC research, and then sent the recommendations to the bank, and were able to finalize a CBA and announce it in May. All of our press releases, which I have links to in the presentation that you can look at later, the press release always includes a detailed summary of the CBA commitment at the bottom of the press release. So I just like to tell people that, because you have to scroll down pretty far to get to that detail, but it's in each press release. And I'll go through some of the more detailed commitments today that directly impact minority homeownership. So we expect the merger to be approved fourth quarter this year. And once that happens, we will connect with the bank and start working on implementation. And it, again, the term should start in January and go for 5 years. This is the branch footprint of the combined Columbia Bank and Umpqua Bank. And these are the communities in Oregon that should see increases. So the CRA evaluations and also the way we structure our CBAs focus on branch locations, and the surrounding communities in terms of measuring impact. The Umpqua Bank CBA has 4 stated priorities. The first one is to collaborate with groups in 4 metro areas to increase Black, Latino, Asian, and Native American homeownership. They also are prioritizing funding for housing development, capacity building funding for minority-led and minority-serving organizations. And they agreed to work with reinvestment coalitions on policy issues as well. I'll go into more detail about this later, but the Umpqua CBA references a 7-point plan for increasing Black homeownership based on an initiative of the Housing Development Consortium in Seattle. And this is a summary of their 7-point plan. It's specifically for Black homeownership, but the CBA does commit to applying these principles to increase impact for Latino and Asian borrowers as well. The mortgage lending commitment is a $3 billion commitment over 5 years. The actual dollar amount it's not a precise number, and it's not as important to us as the metrics at the loan level. So we've asked for the number of loans to increase. And Umpqua actually, to their credit, agreed to some pretty ambitious goals in mortgage lending. They agreed to increase lending to Black, Latino, and Asian borrowers as much as between 30 and 114% are the increases they agreed to. So those are in loan units, which is important because dollar amount commitments can end up meaning jumbo loans and not really a large volume of affordable mortgages. So we want to see a large volume of lower dollar mortgages. They've also agreed to an additional local goal of becoming a leader in 4 markets, including Portland. And the way we define leader is these are markets where they've agreed to significantly improve their mortgage lending to minorities. And they are aiming to exceed the aggregate mortgage lending rates for these markets by 20% by the end of their 5-year CBA term. Umpqua also agreed to develop a mortgage for individuals that don't have social security numbers but have ITINs, as allowed by GSEs, which is government-sponsored entities. Basically, if Fannie Mae will back a mortgage to an ITIN borrower, they agreed to do that. And I just talked to somebody in the earlier session who said she was actually working with Umpqua, and they are developing an ITIN mortgage product that is going to be backed by Fannie Mae. So this, I think, is already in progress. They'll continue to participate in the Oregon Homeowner Assistance Fund. And like Jerry alluded to earlier, working with housing counseling agencies is really important. So they're going to implement procedures to support housing counseling groups, also foreclosure prevention. They've agreed to 4 new branches in low and moderate income census tracts throughout their footprint. And they've also agreed not to reduce the number of branches in low and moderate income tracts. So we always try to get as many branches as possible, a commitment to as many new branches as we can get in CBAs, but often that's something the banks won't agree to, but usually they'll agree at least not to reduce their branch presence in low and moderate income census tracts. So the Columbia Bank currently has an advisory committee, and they've agreed to expand it to 16 members. NCRC is going to recommend 50% of the members of the panel, and they agreed to annual reporting. When the CBA term begins, we create a progress tracker that we share with the bank, and we try to get them to complete it every year to show us progress towards their annual and overall term goals. And they did commit to maintaining relationships with local coalitions. So I saw the sign-up sheet going around. We hope that you'll all participate in the Oregon Reinvestment Coalition effort that's launching in October. And hopefully, it's broader than just NCRC and the CBA, but we think it'll be really important in implementation for this CBA in particular. Jerry, did you want to add anything about implementation?
Some context here, which is when I look at our agreement, so going back a few years, I look at progress. What I see is a lot more progress in making loans to low and moderate income persons than persons of color. And we all could talk about why that is. And it's hard to take racism out of the picture. That doesn't mean that necessarily there are racist individuals working for banks, regardless of their color. Many are minorities. But it does mean that there's a structure in place which makes it much harder for people of color to, in the final analysis, be treated equal. And so I think we have to keep pushing on why that is. I think if you've never owned a home, it's more challenging. You need more supports. Clearly, if you have less money, it's a lot more challenging. And the way that people are valued in terms of their credit may not necessarily eliminate the people who won't pay the loan, may just eliminate people who've had different experiences than the people they're used to making mortgage to. So I think this happens with the community leadership. And if minority homeownership is something you care about, then I think there's a role for you to play there. You know, I know that I see that Jonathan's on the call, and Central Cultural has an entrepreneurship program, small business program. So when you want to start a business, you need assets. And often people's principal asset that they can use to borrow on is their home. If you don't own a home, you're less likely to be able to start a small business. So, you know, in the single greatest factor in, I think, in the disparity of wealth between white households and minority households has to do with home ownership and the ability to have a legacy of income you can pass on to the next generation. And that's the heart of what redlining is. That while white households were able to benefit from the VA Act, from the FHA Act, from the boom of homeownership that occurred in the last century, minorities were excluded from that, and they're behind. And if they could buy homes, they were bought homes in areas that were redlined, so the value was much less. So this is the heart of the, you know, and I think the theme of all these agreements, besides equity in general, fairness in general, based on income, the heart of these CBAs is racial disparities of wealth and how we create wealth for minorities in this country. So I want to just say the context of this is critical, and we have to keep pushing much harder to make it happen. And if the economic environment has changed in ways that kind of put things out of reach the way they're structured, that is, and I know these are issues that many of you are involved in, if you know, a larger home on a single lot is just not going to happen for many of the people that you know, that we work with, or that our friends or neighbors or ourselves, then we need to see different kinds of housing structured for ownership. You know, multifamily home ownership on a single lot. You know, I think that Casa of Oregon has really been a pioneer here in leading these kinds of efforts. And sometimes, you know, you can own through cooperatives, not just through single home ownership. You still get equity, you still increase value, you still have assets. So I just want to put that out there to say that there's some tension around this conversation, and we need to remedy it. Things have gotten worse, unbelievably, right? I mean, how can things be getting worse than what the baseline we start from after 2008 and the slide that so many minority families took? How could things be getting worse? And you know, we know that there are efforts to redistribute income upwards. So how do we transform that? And you know, last thing I might say is a personal story. I went to college in Portland, and like a lot of students, you know, you volunteer. So I volunteered to teach reading in Albina. And if you have me on screen, you know how old I am, or if you know me, you know how old I am. You know, it was a long, long time ago. So I came back, to do the reinvestment summit for NCRC about 5 years ago. And I figured I'd go up to Albina. And there was no Albina, right? The entire community had been removed. In the meantime, if you could own a house, right, or if you had been able to stay in Northeast Portland, the values of your home went through the roof. You made a lot of money, and you had equity, and you could buy another house. But if you were displaced from that community, you lost out on that. So I'd be really interested to hear people address this issue from their experience in terms of racial disparities of wealth. Thanks.
Catherine and Jerry, I had a question. When I read through the Umpqua benefit agreement, what really jumped out at me were those tables that
Yes.
showed the lending by racial and ethnic breakdown over the last year, and then a corresponding table over the next 5 years, what the commitment is. And I recognize it's not legally binding, but it is in writing and it is public, or will be public. So that it can be a tool to really make this real. Can you talk about that?
I do absolutely have some slides about that in a few minutes, but I will say Umpqua was very agreeable to our recommendations. I think for the most part, they took our goals and just accepted them. There was some back and forth about mortgage, but we landed pretty much where we started with our requests, and small business lending goals. They just accepted our initial request, which rarely happens with banks. So it's really encouraging to me, the commitment that they've shown to the process. But I do have some more information on specific mortgage lending goals later.
I think it's worth noting that Columbia really didn't make mortgages. Columbia was a business bank. They had a small mortgage department. Umpqua, as you know, does make mortgages. The bank has been in Oregon forever. So this not only means we're asking Umpqua to do better, but their performance, we thought was pretty, not the worst, but it's still rather dismal for Greater Portland and Greater Seattle. Columbia is now stepping up the Columbia portion of the bank and going to be making mortgages. So we're hopeful that this will matter, but I think we can't be, I don't want to, I'm not sure the order of Catherine's presentation. She's the lead presenter here, but we need to look at, Catherine's, you've attached as an appendix, the Saddle Black Homeownership Initiative, haven't you, I think?
Well, I have some slides on that later.
Yeah, good.
I
Okay.
didn't attach the actual document,
Okay,
but
well, you have
can
the
certainly share that.
So
I'll share
there's
more about
6 or
that.
7 things have to be done simultaneously. I think Umpqua will get there, but we don't just care about Umpqua. We have all these other banks, not just US Bank. We have other banks, and we need strategies to press all of them to make a much deeper commitment to minority homeownership and to fund housing counseling and to pots of money for down payer assistance, and all the different things that can be done, and collaborations with government, which is something that Oregon often does well. Although I know you all get frustrated with this sometimes. Let me turn it back to Catherine.
Okay. Quickly, just to go through the US Bank CBA timeline, it was very similar to Umpqua. Because of their footprint, there was a broader national focus. We had 125 speakers from 23 states, including Oregon. But because of Union Bank's California presence, again, that's the main focus of their CBA. They do have a pretty large presence, though, in Oregon. This is the US Bank branch map. There are only 2 Union Bank branches. And typically CBAs that are negotiated in connection with a merger, the bank usually tries to focus commitments on the branch footprint area that's changing, but we do like to advocate for commitments throughout the combined bank footprint, which includes existing locations like Oregon. So there is a commitment to a 20% increase in mortgage lending to LMI communities and people of color. And that is supposed to be nationwide, so throughout the US Bank footprint. And they did agree to evaluate their progress at 2 years. And if they're not meeting that goal, they'll meet with community representatives to discuss ways that they can improve. This is also one of their goals. It's a little, I'll say, squishy, but it is going to be in their progress tracker, and hopefully we can get some specifics on what they're doing to work towards greater access in home lending. Again, the intent of the plan is to increase lending across the footprint. And if a particular state does not see an increase, we will have a check-in after 2 years of the plan term and develop a roadmap with community groups, hopefully with an Oregon coalition that's being developed starting next month, to work on how they can improve if they're not meeting their goals. The philanthropy goal also is a national goal, but they've agreed to statewide increases in funding for organizations that they haven't previously funded. So any state that has more than 95 branches, which includes Oregon, will be part of this commitment, and US Bank is committed to supporting 10 new organizations they haven't previously given philanthropy to. Those new partnerships are going to be geared towards organizations led by people of color and women. And I'm sure a lot of you have heard this statistic, but only 2% of philanthropy currently goes to organizations led by people of color. And that's something that needs to change. And so we always try to get banks to commit to focusing their philanthropy on groups led by people of color, but also reporting on their philanthropy so that we can actually hold them accountable. And US Bank did agree to annually report on the race and gender of their new partnerships. They are establishing a community affairs team that will focus on rural and Native American communities. And another really big win for us in this CBA was a commitment to increase the size of philanthropy giving. We often hear almost in every CBA campaign from our members that it doesn't help to get a $2,000 or $3,000 grant that you have to apply for, and going through the application process is very cumbersome, especially for a small nonprofit. So we always advocate for banks to increase the average size of their grants, and US Bank did increase to increase their average grant size to 30,000, which is pretty strong and could have a much bigger impact on the recipient. Similar to Umpqua, US Bank will expand its membership in its Community Advisory Committee, and that will include Oregon representation. And the bank will meet annually with other leaders that are involved in the plan, that were involved in the plan development. And they've committed to the bank CEO attending these meetings. and they will also share annual updates on CBA progress. This is something that we've been working on getting commitments to in our CBAs more frequently, just to ensure that we can actually track progress towards the goals and measure the impact of CBAs. And then this commitment is in the Umpqua CBA as well. Once the merger is finalized and plan implementation begins, the banks should send us contacts that will include local and regional bank representatives that we can connect NCRC members or other organizations with. So I want to talk about more specific commitments and how they relate to the actual challenges that groups face, that borrowers face in homeownership. I would love to hear from people here and would love to hear your ideas. I can share a little bit of background, but then I would love to start a dialogue if anyone has any ideas or has experiences with challenges and the hurdles that the obstacles that we need to overcome to really move the needle in minority homeownership. So alluding back to what Jerry mentioned, the Umpqua CBA incorporates the Puget Sound Black Homeownership 7-point plan. And that is a plan that was launched in 2020, and it was started after the murder of George Floyd. A group of over 100 groups in the Seattle area got together, and it was a very wide-ranging group, including mortgage bankers, banks, for-profit and nonprofit developers. Everyone present had a connection to housing in some way, and they had a convening in March. I think it was in March 2021 to talk about how to move the needle on Black homeownership, and they came up with a 7-point plan, which I'll talk about in more detail later. It's part of you've probably heard of some other efforts nationwide. There's several national efforts. The Center for Community Investment is another leader, a nationwide leader in these initiatives. There's a 3x30 initiative with a goal of 3 million net new Black homeowners by 2030. NCRC published a report that outlines what it would take to get to 60% Black homeownership by 2040. So I don't think I need to share. I don't think it's news to anyone that the national Black homeownership rate persistently has lagged behind the white homeownership rate, and it's not improving, which is something that really needs to change. It's persisted at 42%. Today, it's as low as it was in 1970. The homeownership gap between Black and white households is also stagnating at 20 to 30%. This slide is, to me, very stark. This is data from 2021 from the Center for American Progress. So this chart shows the rate of loan originations in 2021. 55% went to white borrowers, 11 to Latino borrowers, and only 8% of loan originations in 2021 were to Black borrowers. So clearly we have a lot of work to do. So the Umpqua plan incorporates this 7-point plan, and it does also call out that the principles of this plan will be applied not just to Black homeownership, but Latino and Asian homeownership as well, where we also need to see improvement. The way this plan was developed is sort of, it's actually a chronological step-by-step plan that starts with marketing and outreach that needs to be more targeted and affirmative for different communities, pre and post purchase counseling. So getting homeowners ready and getting credit scores ready, or savings, or just education on mortgage lending. This is where housing counseling comes in and is really important. Purchase supports and tools are home mortgage products that are actually serving communities. That includes down payment assistance, which in some areas needs to be much, much deeper because of the cost of housing. Then credit and lending products that includes alternative underwriting, housing production policies, and then sustaining owners are 3 other areas that are included in the plan. So the strategy, it's important that it's very holistic. Sustaining owners, I think, is really important for the next few years. We keep hearing that with interest rates going up, the price of homes going up, banks are telling us they're looking at contracting mortgage lending, but home improvement lending and home equity loans doesn't need to contract, and actually having really good products for home improvement is important to sustain existing homeowners who need financing to, do and just regular maintenance, but also energy upgrades to their homes. So I guess I'll stop and see if anyone has any questions. And if you do have a question, if you could speak into the microphone so the Zoom audience can hear.
Thank you so much. I came in a little delayed, but I'm Joy Jones, and I'm the new CEO at Transition Projects, which does a lot of shelter, scattered sites, kind of management. I'm coming out of the San Francisco area working in affordable housing. And one thing being with Transition Projects that I'm beginning to think about is opening up some different buckets under our portfolio. And one is minority homeownership, education, and all of those things. Now, when I bought my home in Atlanta, Georgia, in 2001, I walked into, Atlanta's predominantly Black anyway, but I walked into a community agency that was doing 11 weeks worth of education about home ownership. So my mom and dad had not owned a home. My grandparents built their homes, and that's how a lot of folks got homes, according to my grandparents. Nobody gave them a mortgage, they just built it. And then, so I had to go through the learning process, even though I was in graduate school working on a master's degree, highly educated in that area, but nothing about home ownership, and then bought a home. I do find that the benefit of that was that I could walk into a place that was in my community that I trusted to educate me and walk through that. And that the banks, I didn't have to go to a bank. The banks actually came to that location and they worked with us several evenings, and we could select that place. And so the only time that I actually saw, I never even saw the bank. I actually went from looking at the house, getting my realtor, who was also a part of my community. And then the only time that I actually went into any kind of commercial building was my closing. that all made a difference, I think, in my life. And that was just that's somebody with a master's degree who still needed that level of support. So I think almost in the social worker in me says almost the same approach has to be. And it's one reason I want to look at this for our agency, is that keeping it close to community. I think that people of color in general respond and trust what is in our community. But the education, so when I think about health education, they moved that into barbershops, right? If they wanted to educate about the community, about health, they moved into the barbershops, the churches, those types of things. So I think you have to look at those strategies. It's not that we can or not interested, but I think it's the place of which we trust and can have those conversations that make the difference. The other thing that I think, because I noticed I also have 2 adult daughters in Atlanta who have not moved into home ownership, which makes me wonder, I'm having this conversation. But I do find that because people of color, we kind of fluctuate with employment opportunities, and when everything else, when our foundations are not strong, housing just becomes, when we're just living hour by hour, not even day by day. And as society fluctuates, it impacts us greater, right? And so housing becomes further away, right? And so I see that even, again, my daughters who have degrees, whose degree of stable, but because of inflation and other challenges, they don't feel as confident as their mother to go and buy a home. Now, their mother will push them to that level, right? Because I've been there, but I still see it's not stable among the generations. And that is concerning. And I think that's because we have so much shift in our communities that housing, long-term housing and investment, it's much further away. And so we have to shore that up. So those are just some of my thoughts, but I definitely want to have some conversations about the agency. Thank you.
Well, yeah, if I can respond, Catherine, I think that's very helpful. Some of the things you mentioned are strategic advice for these loan officers. And I don't know that as a community of nonprofits, we shouldn't be meeting with all these loan officers and telling them what they need to be doing. The other is that the agencies have the capacity to work with the banks in that way. And for that to happen, a couple of things need to be in place, and probably were in your experience in Atlanta. The first is they need the money, right, to run these programs. So we have to convince the banks to do much better. Though anyone who's involved with NCRC is the second largest intermediary for African American housing counseling in the country after the Urban League. In 2008, there was all this foreclosure money around, right, because of the foreclosure crisis. And then as soon as that dissipated, those dollars disappeared. That was private funding. So we need to be talking to the banks about significantly increasing their funding, not just for certified housing counseling, but for organizations that want to do this, but aren't going to have certified housing counselors, but they want to house outreach and first-time homeowner programs, which they can do. So we need money from them to do that. The second thing is they need to be attractive to the buyer. That is, if you're an agency that wants to work with folks who want to be homeowners, you can't send them to a place where they're going to get a bad deal, right? Where the interest rates or the closing costs are excessively high or there's no assistance. So they need to have products in place, the banks that want to work with us to get this done, that work for the buyers we're talking about. But otherwise, I think you're right. That's the best way for it to happen. And the only way it happens for people who have something that is going to make it uphill for them in terms of money for payments, down payment assistance, credit. They always are going to need that kind of support from an organizational structure. So that goes without saying. That's very helpful.
Any other comments for now? I hear the word trust a lot. I think that's an issue that needs to be addressed. So when you have mortgage loan officers who don't look like anyone in the community, that doesn't build trust. Um, I was, I also think trust is an issue with marketing and outreach, that the goal of marketing and outreach needs to be building that trust. I like the idea of being close to the community. That's a good idea. I'm going to take back to the bank.
Catherine, I wanted to ask the group if they could just talk a little bit about how they're seeing wealth creation in their own communities. How is that going? Is it happening at all? Are there specific obstacles that you're seeing around that? And you know what? And any what's your sense of how we move forward on those kinds of issues in terms of minority wealth creation?
If it's all right, Jerry, I have one question following up on
Sure.
the last conversation, and then I'd love to hear everybody's thoughts on that. I'm wondering, in the context of the CBAs, what the definition of minority-led organization is in
Yes.
terms of follow-up. One thing that can be very challenging in the world of nonprofits, and from what I've seen, is the board of director versus staff dynamic. And so I'm really interested in, I'm sure there's no one size fits all definition, but I'm just curious what the working definition of that is for these CBAs.
Yeah, let me talk to that. But before I forget, I want to say that it's not as much of an issue when we talk about rural areas. It's not as much of an issue because I think Latino population and some of the indigenous population is scattered throughout Oregon. But in communities that are primarily white, but also have significant poverty, that's an exception to the way we shape these things. That is, we expect that in urban areas, a great deal of folks who are low and moderate income and who are facing barriers will be minorities. That may not be the case in a rural area, and so I don't want folks to feel because you're an all-white community that has poverty and you're working with that population that doesn't that's not of concern to us, or not important in the CBAs. We always talk about rural multi-generational poverty along with disparities in wealth for minorities. So I think that has to be defined with the bank. I mean, it's great if there is if there's a person of color, if there's a woman who's directing the organization, but many organizations have they may have people who are white in particular leadership role, but their board is significantly people of color and women and other groups, or the staff is. So one of the things that we're going to do with these banks is the Oregon Reinvestment Coalition will create its own definition of that. But I think it needs to be flexible. The one thing that the bank may push for that I'm personally a little skeptical about is, what about a great organization that's all white in an area that has a significant minority population, and it's serving minorities, but it's not minority itself. It doesn't have minority staff, doesn't have minority board members. That's problematic, I think, because if you're in a community that has the people of color, has immigrants, then you should be able to hire staff and find board members. But once that's said, I think there's different ways where those folks will show up in terms of board, staff, and it isn't always the CEO or the ED position. But that's ultimately going to be tossed back to you all, and we'll push the bank to conform to how you see those issues. Does that help?
Yes.
So Jerry, to your question is are we creating generational wealth in minority homeownership?
Yes.
The answer is no. I mean, we've been priced out of the market for the last couple of years. COVID really took this odd turn and forced people to kind of consider homeownership, where they're they're exiting their communities. It's driven the price of real estate up. Incomes have risen, but not high enough to kind of keep up with the increased cost. And then you throw in the cost of living, rent, expenses, food, gas. The gap even grows even wider. So, but I'm encouraged because Hacienda kind of looked at this problem to what can we do to kind of position ourselves for that next level of assistance. The banks are now starting to come to the table. How can we increase minority home ownership? You on the screen that you have up here, we get people ready for home ownership, and so we're actually helping the banks facilitate the process by sending
Yes.
them mortgage ready clients. So we want their support by providing operational support, capacity building, so we can provide those year ready or mortgage ready clients back to them. So it makes their process a little easier. And then coming up with new innovative programs. The assistance coming out of the federal levels or state levels only allows us to help about a dozen homeowners a year. So we're barely making a difference. So there's not enough money coming at the larger funder levels. Coming up with kind of unique programs that works in partnership with the banks is kind of what we're looking at. Maybe some additional support from the CBAs to provide some capital back into these agencies in the form of larger down payment assistance. The traditional down payment assistance has only been made available to 80% and below households. But the amount that they provide for support just gets them in the door. And
Yes.
there's still cost burden with mortgage insurance being a high cost in that housing payment today. The fact that it's FICO driven affects the communities of color. They're seeing high mortgage insurance rates as part of their house payment that most families that we see today are. As counselors, we try to guide first-time homebuyers to not spend more than 30% of their income for their housing expense, but yet we're seeing families paying 40-45%. So they're further cost burden, and there's nothing left at the end of the month. Some additional resources to kind of buy down the costs, buy down the rates, additional down payment assistance, larger amounts. If we're really interested in kind of making a difference and creating some generational wealth, the typical assistance needs to grow.
I think we can negotiate for that stuff. And we have to be clear on what it is. I mean, I don't think there's anything, it doesn't have to be, no one's going to pay the insurance fee, but they can provide a grant for, in general, and that can be used to, to buy down the insurance fee. Are you finding that the price of homes is an issue? Can people find a home that's more moderately priced if they can put together the down payment and the monthly payments, or is the inventory just too high for people?
They cannot. I mean, in the Cully neighborhood and most of Portland,
Yes.
most of the families that we're working with today cannot buy in the neighborhoods that they're living in. The median sales price in Portland's now reached $540. The average sales price is over $660.
Yes.
And as counselors today, we have to share with families that they may end up looking at a commute just to get into affordable homes. So outlying areas, the suburbs, are even becoming expensive. So hour-long commutes is not, it's something that they have to consider, or we have those discussions about alternative housing opportunities, land trust, co-ops, condos are no longer an affordable option just because of the HOAs and townhouse
Yeah, and
developments?
I agree with that in terms of condos. Is Hacienda looking at other kinds of development? Putting 4 smaller units on a if the zoning will allow on what would have been otherwise a single family home.
That's something Hacienda is looking at. We're also looking at the co-op model, land trust as
Yeah.
as alternative homeownership options. So that way they don't have to commute out of the neighborhoods that they want to live in, kids are going to school in, or where they're working. So, I mean, we're also looking at a 20% second mortgage program. So putting that larger investment into the purchase to eliminate mortgage insurance and make the housing payment a little bit more affordable means they don't have to travel this far as well.
So the Massachusetts has really pushed by a lot of organizations, but by MAHA, which is a housing organization based in Boston, have really made incredible progress, on second mortgages. But I think this needs to be a major campaign where we come together and commit to. We have to do all the things that Catherine's on the list and the things that you just mentioned, but the organizations may need to come together with business leaders and banks and say, we need, X thousand units of housing, which are priced in this price range, and which are still in this community. How are we going to get there? Because anytime you begin to do something new and use new models, it's going to be more challenging for the organizations, and there may be impediments to volume. So I think this is a strategic question that has to be dealt with on a coalition basis and really begin to move things along in that way. And one thing Oregon does have is you still have a strong IDA program, and you can, I think it amounts to, after several years, about $20,000. Well, that can be the beginning of a nest egg for a house. So isn't everything we're talking about, we really need to look at a campaign to change what's being built. And I know that the organizations have gotten into this through fights on zoning, right, and zoning restrictions in terms of multifamily, which is important. But we're not talking here about multifamily apartments, which are needed. We're talking about multifamily homeownership. So I think there's room to begin to put forth an alternative agenda for housing development and the scale of housing development.
There's one comment in the back of the room. Yeah.
Hi, this is Joy again. One thought I had, or I was wondering about, 7 weeks ago before moving to Portland, I was in the San Francisco area, and in Santa Clara County, which is not San Francisco, but right outside, they had built, and I would call it an affordable housing building, but you bought your unit, you didn't rent your unit. And I just thought that was the coolest thing, right? I mean, there were some restrictions, like you had to own it for 5 years. You had to do this. There was some level of assistance, because what we see in the housing market right now, it really is moving to being unaffordable. Even me, previously coming out of the southern region, you really can't afford a house in the South either. Which you used to be able, like, well, you just move to the South and you can afford a house. But that's coming to an end. So I almost still think, almost like what we're doing with affordable housing, we're going to have to build it, right, and build our way out of it. But I did think that was really interesting, that it was you bought all the units, and I think it was 30 to 50 to 60, 70% AMI. But are you aware of that, or heard about that? I want to explore it more, but they're doing it in Santa Clara County, which I think was really great, something that we should consider.
Yeah, well, Santa Clara County is Silicon Valley, so it doesn't get much more expensive than that. It's probably equal to Portland, I would say, which is really expensive. In other parts of Oregon.
There's one follow-up
Just in response to what you were saying, there are organizations that are working towards that or have projects like that. I can't disclose who they are, but yeah, so that is something that they're working. They realize that home ownership is that key in order to do that. There aren't as many projects here locally as I think we'd all like to see, but they are out there. Yeah.
I
But
think I
for
saw
co-op,
one more hand.
just to say quickly, for the co-op model, I mean, I think that CASA has developed, a pretty phenomenal record of co-ops over the years. Go ahead.
So this 7-point plan includes obviously housing production as one area that needs to be addressed. And what I think is neat about how this is progressing in Washington and mainly the Seattle area is that different organizations in this coalition have taken leadership on different aspects of the plan. So there's also policy, like local, regional, and state level policy changes need to also take place. The Housing Development Consortium has taken the lead on policy advocacy efforts. So just food for thought for the Oregon Coalition that's going to launch next month. It is going to take, all 7 strategies working together to really move the needle. And I agree, we need much deeper down payment assistance for not just low income, but moderate income borrowers as well, because of the cost of housing being so out of reach. So we just have 5 minutes. Does anyone else have any questions or comments? The slides should be available to you. There will be an Oregon inaugural Reinvestment Coalition meeting coming up in October. And if you signed up the list that went around today, you'll be invited to that meeting. And if you have any questions or need a copy of the slides, Jerry and I are always available. Feel free to email us. I think that's it. Thanks, everyone.
Thank you. See you in, if not before, we will have a reinvestment summit in the autumn of 2023 in Oregon. So we'll see you all there, hopefully. Thanks.